Have you ever sat in front of your charts, watched an asset skyrocket, and thought to yourself, why didn't I catch this move earlier? You're not alone. Every trader has felt that frustration. But here's the good news. There's actually a way to spot these moves before they explode, without cluttering your chart with dozens of indicators or making trading more complicated than it needs to be. Stick with me for a few minutes and I'll show you a simple, beginner-friendly method to identify short-term, situational trends. These are the kind of market moves most retail traders completely overlook. And by the end of this video, you'll also know when it's smarter to stay out of the market entirely. What are situational trends and why do they matter? So first things first, what exactly do I mean by situational trends? Situational trends are those powerful short-term market moves triggered by external events. I'm talking about things like breaking news, sudden economic shifts, earnings reports, interest rate decisions, or even unexpected political or global developments. Now, these aren't just ordinary price swings you see every day. They're catalyst-driven moves, meaning there's a real reason behind the momentum. Let me give you a quick story. Not too long ago, I caught a situational trend triggered by the U.S. non-farm payroll release. That one trade didn't just recover a recent loss, it gave me enough profit to walk away smiling. Why? Because I recognized the move early before the majority of traders jumped in. That's the beauty of situational trends. If you catch them early, they can change your trading results in a big way. How to tell a real breakout from a fake one. Here's the million-dollar question. How do you know if a trend is real or just a fake breakout designed to trap traders? It's easier than you think if you have the right process. I use a simple 3-step checklist to filter out market noise and avoid false signals. Step 1. Volume confirmation. When price rises and volume rises along with it, that's genuine buying pressure. But if the price is climbing while volume is flat, or worse, dropping, that's your warning sign. Don't let a weak push trick you into chasing. Step 2. Key levels. Always pay attention to support and resistance zones. A strong breakout above resistance or a clean bounce off support is one of the clearest signs that a trend has weight behind it. Step 3. Indicators for extra confirmation. I like to use indicators such as the parabolic SAR, moving averages, RSI, or the stochastic oscillator. These not only help confirm direction, but they also signal when a trend is slowing down. That way, you know whether to stay in, add to your position, or get out before the market turns against you. Combine all three, volume, levels, and indicators, and you'll filter out most of the fake moves that catch beginners off guard. Mistakes traders make during situational trends. Now let's be real. Even experienced traders mess up when things move quickly, and most of those mistakes come from letting emotions take control. Here are 3 of the biggest mistakes to avoid. Mistake 1. Chasing green candles. Jumping into a move just because you see price flying is the fastest way to buy at the top. By the time most traders notice, half the trend is already gone. That's not strategy, that's gambling. Mistake 2. Ignoring confirmation. Never assume a price spike equals momentum. Without volume and indicator confirmation, it's usually just noise. A strong candle alone doesn't make a strong trend. Mistake 3. Skipping the backtest. If you haven't tested your setup, even in demo mode, you're flying blind. Backtesting builds confidence, and confidence builds consistency. That's how you turn trading into a skill instead of an emotional roller coaster. Remember this, patience beats impulse every single time. When the best trade is no trade. Here's a truth not many traders admit. Sometimes the best trade is no trade at all. If your indicators are giving mixed signals, or if the price is stuck in a tight consolidation, the smartest move you can make is to stay out. In trading, discipline often pays more than action. When in doubt, sit out. Not every candle is your calling. And here's another tip. Always look at multiple time frames. Use short-term charts like the 1-minute or 5-minute for precise entries. but confirm those entries using longer time frames, like the 1 hour or 4 hour. That way, you're not just reacting to noise, you're aligning yourself with the bigger picture. Final thoughts. So let's wrap this up. If you want to catch situational trends before the crowd, confirm with volume, respect key levels, double check with indicators, avoid chasing, never skip confirmation, and always test your strategy. And most importantly, remember, sometimes sitting on your hands is the most profitable trade you'll ever make. If this video gave you an insight moment, don't forget to hit that like button, drop a comment, and share it with a friend who's still chasing green candles. Trade smart, trade with confirmation, and always protect your capital. Because at the end of the day, it's not just about catching every trend, it's about catching the right ones. Thank you for watching. Like and subscribe to this for more tutorials. Remember to register through the link on the description and start trading in Olymp Trade.